Okay, so let's just do this real quick. We're just gonna go through all four of the exercises as quickly as possible, and it doesn't really matter like too much if it's correct or incorrect. So the sales department forgot to report a 4,000 sale on account. Okay, so first off, I guess it's not gonna be cash. It'll be coming into the accounts receivable account, and this is gonna be service revenue. So 2020 depreciation for equipment 10,000. It's quite easy. Depreciation expense of 10,000, and then accumulated depreciation on equipment 10,000. Okay, so there is payroll. What is that? Payroll. Jeez. Owes payroll. Okay, so then it's gonna be salaries and expenses most likely, and then it's gonna be expense payables. 5,000. 5,000. So this is the insurance policy. So it's gonna be, well, it's gonna go into prepaid insurance, and then it'll most likely insurance expense. Okay. So then, because yeah, so I mean, if you guys remember, you guys can remember that. We'll do the income statement next, or yeah, we'll do the income statement next. So like, okay, so like for sales, first off, you need to get the sales revenue. Sales revenue, what is that? Sales revenue, there we go. Next, you're gonna have to find out like the deductions from the sales revenue. So like you're gonna see, for example, the returns and allowances and the discounts, pretty much. Oh, as well as freight in. Sometimes there isn't freight in, but if there is freight in, then that could be one of those things. Returns and allowances, 18,000. Sales discounts, 15,000. Freight in, 15,000. So you guys can calculate the net sales. 1,000. 1,452,000 minus that for cost of goods sold, get the gross profit. Next is the operating expense and the selling expense. So first thing first, most likely you have to pay the salespeople salaries for those sales. The salespeople go on trips to sell, travel and entertainment, advertising expense. Would there be something else besides those things? I would say maybe inventory. But yeah, probably not. Okay, so sales and salaries and sales, right? Travel, entertainment, 3,000. Advertising expense, 8,000. Administrative, you have to pay the officers. So salaries for those officers. And you're going to have legal, obviously, and professional services. Very important. Supplies, like office supplies and all that. And let's see, is there anything else? Maybe insurance, would you say? Would you say insurance? Yeah, insurance. Insurance expense. So officers get paid. Salaries for those officers. Okay. Legal services. Professional services. Supplies. 11,000. Insurance expense 10,000. Other revenues and gains, if there are any at all. In this case, there are. For example, there's rent revenue, as well as in this case, there's actually gain on sale of land. Okay, so rent revenue, 25,000. gain on sale of land, 20,000. Other expenses and losses. So here, we'll most likely see like maybe there will be interest on the bonds and notes. Okay, if there are any at all. And let's see, income tax expense most likely. Yeah, interest on bonds and notes 10,000, and the income tax expense 60,000. Okay. That is the income statement. Next, let's do the statement of cash flow. Operating expenses, gain on sale, if there was a gain on sale investment, increase in AR. What else? Up. Plants and assets. Gain on sale of investment. It says, what is that? 3,400 in the gain. So we would have to deduct that from the net income. Increase in AR. What is that? 11,000? Or no? Let's see. $16,600. Actually, I think this is supposed to be positive, no? Oh, never mind. Whoops. Never mind, that's depreciation expense, not that. Depreciation expense. 11,000. Okay, so cash flow from investing activities. Yeah, we got the plan assets, investing activities, investments, and that's it. Sale on investments. Sale on investments, plan assets, 80,000. Investments, 30,000. Sale on investments. Purchase of land. Sale on investments. Cash flows from investing and financing activities. Long-term payable notes. Retirement of those notes. Dividend payments. Issuance of common stock. $20,000. Issued retirement of notes payable. Payments of cash dividends. Okay, and the balance sheet. So for the assets, the current assets, what'd you say? Investments available for sale. Prepaid. Prepaid insurance. I want to say notes payable. Notes payable. Oh, whoops. Supplies and inventory. Long-term assets. What is that? Long-term assets. Most likely going to be things related to equity investments, equipment. This would be like trademarks, copyrights. When it comes to current liabilities, you'll be seeing notes payable. Salaries and expenses, or I believe it's salaries and expenses payable. Accounts payable. I'm gonna have to sort of like look and see like what is the service revenue, but long-term bonds payable. I suppose notes payable. Yeah, so we have to like maybe take a little closer look on some of these accounts to see like why they're like certain players. 2,000 equity investments. Let's see, 10,000 equipment. 1,000 trademarks. 1,000 notes payable. 5,000 salaries and wages payable. 3,000 accounts payable. 15,000 unearned service revenue. 1,000 bonds payable. 10,000 and notes payable. 5,000 and retained earnings. 3,000. Okay.